Hey, good morning, everybody, or good afternoon, everybody. This is Kathy Elkins with Premier Marketing. I have on the phone with me today Corey Martin. He's the Regional Sales Manager for Sagicor Life. And Corey's got some really good information to pass on, to share with us today. One of the things I've asked him to help me out with on this to share is just 5 items that can actually get you from conversation pieces to start, have a talk with your clients, and move forward with designs and information that you could actually bring something to the table tomorrow with your clients. Take action today, learn it, and go from it, and actually increase your commissions that you're currently making. One of the things I'm going to tell you just from all this information after talking to Corey when he put this together is grab your piece of paper, grab your pen, get ready to take notes, get ready to enjoy a good, about 45 minutes of talk here today and some learning just to make sure that we're all on the same page. Just get everything ready to go and enjoy the webinar. And how's Corey doing today?
Kathy, well, great. Thanks so much for having me. I really appreciate it. Glad to be with you.
Wonderful. I guess I just realized we're doing this off speakerphone, so I hope everybody could hear me. Is that any better?
Oh, yeah. Crystal clear.
Oh, okay. Wonderful. Sorry, everybody. But, yeah,
good.
So Corey, I know you've got a lot of great information to talk about today. Just, even with the social distancing, one thing I love about your carriers, you're probably one of the first carriers that jumped up before anybody else did and had everything ready to go online and ready for everybody to attend and do things without having to be in front of your clients, which is wonderful. So actually, when people talk about our client, carriers ready to go, I'm like, you're the first one that were already there before the pandemic hit.
No, so, you know what? I really appreciate you saying that too, because we, in March, as everything's shut down, April was the best life insurance month for Sagicor ever. So we were there and ready to go when a lot of carriers were scrambling around trying to figure out how to do this. What does social distancing mean? And then EMSI going out of business, and there was a lot of things that kind of conspired to hurt the marketplace in general. But boy, we have not slowed down. So that's part of the conversation we'll share as well. So thank you for saying that.
Yeah. Well, I know there's a lot of information, so kind of let's get started. Everybody's probably have their paper and their pen by now, ready to take some great notes and learn some ideas. So if you have any questions, please make sure that you're typing your messages up on the chat box. We will go over the questions later, and that way we can talk about them as they come in too if we need to. But let's enjoy the show.
Kathy, thanks so much. Thanks again for having us. My name's Corey Martin. I'm the Regional Sales Manager for Sagicor Life. I'm based here in the Dallas-Fort Worth area. I've been around a long time, and this is as far as conversations go with life insurance producers, I've had a lot over the years. And so what I'm going to share with you today are some insights on how this positioning is taking place, and specifically for single premium life. Our wealth care product is taking the market by storm for a number of different reasons, and we're going to share with you success stories. So this is going to be a progressive talk from the standpoint of I like to when I was in the field, what I always did is certainly you create the problem with your client, you discuss what the problem is, and then once we continue to walk down the road, we talk about, with the solution in mind, what that's going to look like. So what we've done here today is I want to really educate you about what is taking place in this marketplace, the single premium life market specifically, how it kind of dovetails into having the care needs conversation, which is, let's be honest, is a very difficult conversation to have, especially when you're talking with people about what the future looks like and the need for care potentially. So we're going to cover a lot of topics today, but my objective is, in the 45 minutes that we'll get a chance to visit together, is to prepare you and to tool you up on how to have these conversations not even just how to have the conversation, but where the money is that your clients potentially have to fund these solutions. So, and if you're like a lot of agents that I've spoken with previously, you may not see yourself as a single premium life producer. Don't let that stop you. Don't let that be a hindrance to getting out and engaging your clients in these conversations, because these are productive conversations, they're profitable conversations, and they're conversations that a lot of agents and advisors are not prepared to have. So again, that's why we hope you'll take good notes. You'll make sure to have a dialogue with Kathy, a dialogue with myself. I'm glad to help you on the follow-up. But with that in mind, let's get rolling. So a couple of disclaimers about life insurance in general and Sagicor specifically. But let's get to the reasons why, and really the conversation revolves around some of these facts that we'll share, that 7 in 10 people who turn 65 are going to need care in at some point in their lives. They're going to need care, according to the Wall Street Journal. So these are third parties providing this information. So 70% of potentially the people that you engage that are in their early 50s, late 50s, early 60s, 7 in 10, so 7 out of 10 of those folks are going to need care at some point in their life. So it's important to understand what those numbers look like. And to me, that really just speaks to the overall opportunity of where these dollars are coming from, because again, 7 out of 10, that's a big number when you look at it as the law of large numbers. Another fact is that women are more likely than men to not only need care, but potentially become a caregiver, according to the Institute on Aging. And the Institute on Aging, if you're not following the Institute on Aging, I would recommend Googling Institute of Aging and visiting their website, and actually keep that as one of your favorites on your Google searches, because they have a tremendous amount of information from a kind of a independent third party that provides a lot of this detail that people just frankly don't know. Another topic that we're going to talk about, Medicare can't be counted on to cover costs of care. A lot of people don't know that. If you ask open-ended questions, a lot of those open-ended questions are going to lead to, well, Medicare will take care of that, Medicaid will take care of that, whatever the case might be, and well, not so much. That's an important topic to consider, is that Medicare can't be counted on for those costs. Number 4 is a bit of a touchy conversation, but very important in the big scheme of where care is going to come from. So if most parents don't have a plan, so you think about the clients that you've got, most of their parents don't have a plan. And if they don't have a plan, then the family, the kids, you and me become the plan. So again, that's an important part of the conversation to understand as we look at the kind of the macro of what this market entails. And more than half of people who are parents expect their children to be physically and to care for them physically and financially as they age. That is probably one of the most unrealistic expectations, and more than half of the people that you will engage will have that exact same issue. So again, as we move along, you'll see where these become important topics of conversation, but these are actual statistics that are taking place with the clients and the people that you're going to talk with. So additional key items to consider when it comes to chronic illness, and when I talk about chronic illness, I talk about adult onset diabetes, I talk about arthritis, rheumatoid arthritis, dementia potentially, Parkinson's disease, lung disease, Alzheimer's, or any cardiovascular issues. So 6 in 10 adults right now have some type of chronic illness. 40% or 4 in 10 have 2 of those or more. So why is that important to know? Chronic conditions typically don't improve with age. So if we know that, then by gosh, we better address that issue now, and the earlier, the sooner, the better. Another key item to consider, what in the world does it cost? We were investigating care for my father in the North Georgia mountains, I was absolutely flabbergasted to find out what the cost of care is. And it obviously it can depend on where you live. If you're in Connecticut, if you're in Texas, if you're in California, the cost can be wide ranging, and in a lot of cases, very, very devastating. So where and how are we going to utilize our assets to take care of those expenses? What's your plan? And I was frankly a bit astonished by the fact that 80% of seniors currently are receiving care, or they're in private residences. They're not in long-term care facilities, according to the Family Caregiver Alliance, which is another terrific website, familycaregiveralliance.com. If you Google that, there's a tremendous amount of information there as well. So again, 80%, and I believe that a lot of the seniors that are receiving care in private residences can't afford any of this care. That's the primary driver of this. So again, knowing all this as a trusted advisor is critically important to know, hey, Mr. and Mrs. Client, what is your plan for care, or what is your parents' plan for care? So the growing opportunity is right in front of us. I mean, baby boomers are turning 65 at an unprecedented rate, and most of them are frankly unprepared. We all know that. Underestimating health expenses. If you laid out the cost of care potentially in your area, staggering, absolutely phenomenal how much money it's going to cost to take care of those ongoing health expenses. So medications have done a great job. Pharmaceutical companies have done a phenomenal job preparing us to live longer. Well, what does that mean? Well, that means that as I live longer, if I have not only a chronic illness, but potentially 2 chronic illnesses that won't get better, what's going to happen to me? If I live to age 85, how long am I going to be dealing with these chronic conditions? And so frankly, ignoring the cost of care. A lot of people just don't even want to face it. They don't want to talk about it. But you know what? It's our job, and we're going to give you the tools and the concepts, the ideas of how to get in front of people, how to structure those conversations, and frankly, setting their affairs in order so that they'll feel comfortable, confident moving forward, that they're prepared. So as this opportunity continues to grow, here's in just a cross section of America among the American Institute of CPAs for personal planning trends, 77% of individuals, so 77% of the people that you're going to talk with that are nearing retirement age or are at retirement age are worried about health-related costs. It's a concern. It's something that potentially keeps them up at night, 77% of the time. Market fluctuations, you know what? People who are nearing or at retirement, they tend to pull back. They tend to put their money in safe, secure instruments. 53% of people that's a very concerning issue, as longevity is something that we're all going to have to address. Unexpected costs, certainly half the people are worried about, do I have enough money on the sidelines to take care of what might come potentially. Lifestyle changes, what's that going to look like? So again, as we go through and address these concerns and address the problems that your clients are thinking about right now, we're going to address each of these potentially with our wealth care contract, and the single premium life options that are available to you. Being a financial burden, I thought this number was kind of small, 22%. But again, 22% of the people that you're going to talk with have all of these concerns, and being a financial burden is certainly one of those. And then the same percentage of people, they want to leave something beyond their life. They want to leave a legacy. So we're going to do our best to address every single one of these opportunities, every single one of these options with your clients from a concern standpoint. So when it comes to, again, the growing opportunity, dementia, Alzheimer's is a huge concern. My grandmother, my wife's grandmother, and grandfather both had Alzheimer's disease, and I can tell you it is a devastating event. 10% of people age 65 and older have it currently. It's something that's not going to go away. Nearly 50% of Alzheimer's patients are ages 75 to 84. Again, this is a condition that does not improve. So the potential for care is 5.5 to 6.5 years. And it's simple math to figure out even if it's on the low end, a 5-year event, and the annual cost is in excess of $200,000. Where in the world am I going to come up with $1 million for potential long-term needs? So as we address all of the growing opportunity, the questions that your clients are asking themselves, it's important that we start the conversation. As I mentioned previously, I've been in the business about 25 years, and one of the absolutely best presentations I ever was part of was an advisor in the St. Louis area who was a perennially an MDRT producer. This guy and his agency are just absolutely phenomenal. Periodic life premium, annuity premium, single premium life, whatever it is, they're absolutely they're the best. He made a presentation that I was part of. I was fortunate enough to be there, and John is now a friend of mine. So when he gave his talk, somebody in the very front row of the presentation raised their hand after he was done and said, "John, let me ask you a question. What do you use as a fact finder?" And that opened the conversation of what does your fact finder look like? Well, if you were raised in potentially in the Northwestern Mutual system or the money system, or your fact finder may be about 17 pages long. John got up and actually walked back to a whiteboard that was behind him, and he wrote down these 3 columns. And potentially, if you take your piece of paper and pencil and just draw 2 lines down the left-hand side and the right-hand side to make 3 columns. Tax me now, tax me later, tax me never. And actually, he wrote that on the whiteboard, made those 3 columns, and he said, "Ladies and gentlemen, this is the #1 fact finder that will improve and take your practice to levels that you've never seen." And I thought that was one of the most impactful things in this business that I've done, is that, you know what, and I was guilty of this as well, using a fact finder that was completely unnecessary. 17 pages of graphs and charts is really not necessary. So if we identify, Mr. and Mrs. Client, can I take a minute with you to review your savings and where your money is through the lens of taxation? If you do that, have this become part of your process, you will create more opportunities than you can realize if you understand where the money is. And we're going to share with you where the money's coming from to fund these opportunities, to fund these potential life contracts, to make these funding decisions. Where is that money coming from? It's important to know where it's stored. So it's typically in one of these 3 buckets. And right now there's over 20 trillion with a T dollars on the sidelines. So what does that mean? Well, that means that money is being put into the banking system at an unprecedented rate. the stock market, again, people are pulling their money out, especially if I'm nearing or at retirement. I've during this time of COVID and all the uncertainty that's happening, I've pulled back. There's a tremendous opportunity for money that's in CDs. That's the primary funding source of where we're finding the money for these conversations and funding solutions for wealth care. So again, if you want to see a copy of this, I'd be happy to share it with you. But again, it's just as simple as 3 columns on a piece of paper, your letterhead, absolutely perfect, absolutely fine. Having the conversation about who would assist you with your care needs is something that is going to be an uncomfortable conversation. I'll just share that with you right now. But it's got to be had. That's part of this dialogue, part of this conversation, part of uncovering the opportunities is not only finding where the money is, but finding out what your pressure points are for your clients. So who's going to assist you with your care needs? As we know, most parents currently believe that their children are going to be part of that. Well, do the children know? Are the children looped into that conversation? 55% of the time, again, as we had mentioned before, kids are going to care for their parents, or their parents are going to expect that. And then it's important to also know that women are more likely to need care and become caregivers. So again, we're finding these contracts are written on both husband and wife, and people have the ability to fund for both husband and wife. So again, it's important to understand the amount of money that is now in the banking system. And I've used this analogy before, and I've seen it with my own eyes down in Seguin, Texas, which is down in South Texas, just south of Austin. There are banks and lending institutions that are going up pretty much by every month. There is a brand new marble floored bank going up in the country. And a lot of that reason is because there's a lot of money, there's a lot of fracking money that's available to these property owners that have been in families for decades. People are walking into some of these banks with $100, $200, $300,000 saying, can you help me? What am I going to do with this? So that's just that's just one example of money that's flowing into the banking system because people just honestly don't know. They don't know what to do with what they've got. And if you're telling yourself right now, well, you know what, my clients typically, they don't have a lot of money. Well, I hear that a lot. And that is certainly not a reason to not engage your clients in conversation about tax me now, tax free, and tax deferred. Those are opportunities for you to find out where that money is. So what are your goals, Mr. and Mrs. Client, for that money that you set aside? So once you've identified where that money is, it's important to understand what are your goals for it? What do you want? What do you want to accomplish? Well, we're going to talk about this in the context of why wealth care. So if your goal is not to lose value, guarantees, that's what I like to see, and we hear that we hear that a lot in this marketplace. Late 50s, early 60s, 70s, even up to age 80 and beyond. Guarantees are important. Well, why wealth care? Lifetime guaranteed death benefits. How about that? Would that be of interest to you? Access to funds, is that important to you? Absolutely. Penalty-free return of premium from day one. Well, I do want some growth opportunity. I'd love a little bit of growth on that, and we find out a lot of times that CD money, are you happy with the rates of return, Mr. and Mrs. Client, on your CDs? Absolutely not. There is not an opportunity to grow exponentially the dollars that are in CDs or that are in banking accounts. So if you want growth opportunities, Absolutely. We've got strategies to employ for upside growth with downside protection, keeping in mind that a return of premium is guaranteed. Protection from health-related risk. Well, that's the conversation that we're having. What is your plan for care? Where are those dollars potentially going to come from? Chronic illness and terminal illness that are available on wealth care with no additional cost, and more importantly, no additional underwriting, which is huge in today's market. So when you do your due diligence on these types of products, keep in mind that no cost and no additional underwriting for that benefit. And then legacy, we've talked about legacy concerns as well, and we will cover that base as well, because you've got a very tax efficient way to transfer wealth. And again, that piggybacks with the tax conversation of tax never. These are dollars that are potentially taxed never. So let's look at an actual case that we did for Bob and Maria. These are both 65-year-old individuals that we uncovered by utilizing the tax conversation, or viewing this through the lens of taxation. We came across a couple of healthy individuals, about $2 million in assets. Their needs were based around not only controlling their assets, but making sure that they had some type of leverage in place for that future health-related risk, that chronic care that had run in their family. So once we've identified this particular client, here's the outcome. So that $100,000 deposit, so what we talk about is reallocating assets. So when you talk about reallocating assets, that sounds a lot more favorable than paying premium, right? So for reallocating assets into a wealth care contract, here are the benefits. At the end of year one, that $100,000 has leveraged up on a current basis almost $215,000 worth of federal income tax free dollars that would take care of legacy, that would take care of chronic illness potentially. Again, guaranteed return of premium. If you cancel after day one, you still get $100,000 back. And at the end of year 20, if you decide, you know what, this potentially isn't for me on a current basis, $187,000 is back in your pocket, but you still always have the guarantee of $100,000 available to Bob. So as we moved along in the conversation, this is where it took a turn where Bob was more than intrigued. If he potentially suffers a chronic health event that makes him incapable of performing 2 of 6 ADLs, activities of daily living, that would trigger the benefit on, again, taking $100,000, leveraging up and having available almost $190,000 available for the cost of care. How many instruments can you take $100,000 and have almost double that number available to you at the end of year one? Not many. So again, the leverage of this becomes increasingly important from a value standpoint. I've got return of premium guarantees. I've got current death benefit values. I've got chronic illness values. And then I have resources at my disposal to take care of that care when that day comes. Now, Maria, again, just to run through these numbers specifically, we more than doubled. She was a healthy female, so she was able to more than double the amount of leverage that she could have from day one. And here are the numbers available. So again, as we uncover these opportunities, the numbers kind of speak for themselves. We get the client to nod in agreement that these are my concerns. Yes, these are my concerns. Yes, these are my concerns. We walk them down the path, and then the illustration becomes really immaterial. You are using leverage. You are using potential growth. Even if you're 65 years old and there's longevity in your family, potential to live to 80, 90, I want potential upside. Well, great, because at the end of year 20, your value is going to continue to grow. If you live into 25 more years, 30 more years, whatever the case might be, you've got an opportunity to grow that and create an additional value as this policy matures. And you see again, $210,000, more than double the leverage that I need for chronic illness availability. 2 of 6 ADLs at the end of the first year. I've created a pool of money that I can now draw from. And again, if in this particular instance, you've taken $100,000 and this came out of a CD, so that was a tax me now bucket. We transferred that $100,000 or reallocated that to a tax-free bucket because the death benefit is tax-free, the income for chronic illness is tax-free under current tax law. So again, we've created that opportunity by defining where the money is in the different buckets that are available for these particular individuals. So let's now that we've talked a lot about the potential problems, the potential what your clients are thinking about, here's the challenge, Mr. and Mrs. Client, the solution becomes apparent. And the solution in a lot of cases is wealth care. We write this up to age 85 on a preferred basis. Return of premium is available from day one. Again, there is no risk involved without reallocating from one pocket to another here. Return of premium from day one. Lifetime guaranteed death benefits with upside potential, and we'll talk about that here in a bit. Credited interest rate bonus, 50 bips. So think of it as a persistency bonus. After year 11, 50 basis points is credited to the contract after year 11, with a no lapse guarantee as well. So you've got all of the benefits that people want to talk about, all of the potential upside that people want to talk about. It gives you again, the illustrations really don't, again, it becomes immaterial at that point as we've already identified what the challenges, the concerns, and the potential pitfalls and problems are. This solution really kind of sells itself. So the accelerated and chronic illness, again, important to remember that no separate underwriting or additional cost is available. It's part of the contract. So up to $500,000 is available of the potential death benefit, and the chronic illness trigger is the 2 of 6 ADLs, the inability to perform any of those, the bathing, eating, dressing, toileting, continence, or transfer, and severe cognitive as well, which we know is a challenge in today's space. So one solution, here's what we talk about, growth opportunities. Now, again, this will be part of the conversation that you're gonna have. So we've got a current declared rate strategy of 2.5, 8% on the S&P cap strategy, 65% on our global multi-index strategy. You can allocate to any of these potential options, but what's really exciting and what we're finding out, about 75 cents on every dollar, if you pay attention to the bottom of the screen there, for a 1% annual account value charge, we've got a high cap and a high par strategy, which is now currently 12 for our S&P 500 index and 80% to our global multi-index strategy. And we'll talk about how the GMI works. But again, you've got no downside. You've got downside protection with upside potential for little to no cost. You've got a 1% annual account fee. You have a potential of a 12% upside on the S&P. Exciting opportunities for people that longevity plays into their family. So let's just talk through how the two indices works. The S&P 500, pretty straightforward. It tracks the S&P on a regular basis. It's again, the S&P is continually trackable on the web. The GMI, or the Global Multi-Index, throws in the Hang Seng and the Eurostock 50, which are more global exposures. So if you have clients that are interested in more global exposure, we find a lot of folks turn to the GMI, or the Global Multi-Index. So the high index, 12% cap currently, 80% par, very nice opportunity with a 0% downside. So no risk of loss here. This is an index that is easily trackable, easily explainable to your clients. And just, again, we want to make sure that we understand that the death benefit is how the chronic illness benefits are paid. So we want to grow that death benefit as much as we can over the next 10, 15, 20, 25 years or more. So that gives us a terrific opportunity to do that. What's another important issue, and again, if this is a new marketplace to you, even if it's not a new marketplace to you, it's important to understand the differences between chronic illness or long-term care riders. WealthCare Accelerated Benefit Rider for chronic illness is an indemnity. It's an indemnity benefit. So once you provide proof of claim, it's an accelerated cash payment. We don't care what it's for. Use it for whatever you need. The last thing that you want to do when providing your clients with these types of contracts and these types of benefits is have them worry about reimbursement plans where they not only become a caregiver, but a receipt provider, which is horrendous. Take it from me. That's not something you want to be doing. Is making your clients provide receipts to provide for care. Doesn't happen with Sagicor. Again, no restrictions on what you choose. The availability of benefits. The claim form is one of the best pieces of the pie here. It's a 2-page claim form, very simple, not something you have to fill out each year or qualify for each year. It's a one-time benefit. Once your client qualifies one time, they can turn the benefits on or turn them off whenever they choose. No upfront costs for the rider, and again, no additional underwriting. Some of my competitors require for that long-term care benefit rider will provide some type of get up and go type of underwriting, where they have to qualify and they have a healthcare provider that will visit with them and make them get up, do things potentially in their office, walk across the room, recite certain words, do certain things to qualify for that. None of that is required with WealthCare. And then for you, no long-term care insurance, so no health insurance licensing is required. So again, it makes it simple for you as well. I alluded to the fast and easy claims process, and believe me, it is very simple. This is what makes us different, is the simple claim form. It's one time. They don't have to resubmit or submit any medical receipts of any kind. So the benefits being tax-free, it's an acceleration of the death benefit. It becomes very simply understood and explained. Let's talk through how the underwriting process works. So for those of you that may not be familiar with our accelerating platform, we have, as Kathy had alluded to in the beginning of our discussion, accelerating is a platform that we've built an automated engine for underwriting. So you take these applications, these are all done as e-applications. The process is very clean, very simple, very easy. We're happy to educate you about how to take an application, how to do an e-application. We do a lot of training in that regard. It's very simple and frankly, where most companies are continuing to move forward is providing e-applications. So when we look at these applications from an underwriting standpoint, we underwrite them as net amount at risk. So think of the net amount at risk as the difference between the deposit, in the case for Bob and Maria, for example, $100,000, and the benefit for Maria, for example, was $235,000 death benefit at the end of year one. The difference between those two numbers is the amount that we underwrite. So in that particular instance, her net amount at risk was about $135,000. She would fall certainly at 65 years old under those net amount at risk guidelines to go through the accelerated underwriting at $350,000 or less of net amount at risk. So again, we're getting these and we're seeing these come in and come out in a very timely fashion. A lot of it, again, we're happy to spend additional time with you. If you'd like training on our accelerating platform, our e-application process, it's very clean, very simple, very easy, never a telephone interview or a senior supplement, so we're not gonna put you or your client in a bad spot. So again, as we talk through this, just as a refresher, as we kind of get near the end of our conversation here, where to find the money? Where do we find these funds to meet the legacy and chronic care needs? Well, as we talked about, $2 trillion out of the 20 has flowed into the banking system since the COVID pandemic began. So again, engaging those people with the conversation about let's view this through the lens of taxation will open up a lot of those opportunities. And then it's, again, we can talk about rates of return. We can talk about, is a money market account or a CD more efficient than potentially this instrument or a wealth care type of design. Cash value life insurance policies that were sold potentially 10, 12, 15 years ago, these chronic benefits that are on today's life insurance policies were developed just within the last 4, 5, 6 years. So if your clients currently have an older cash value life insurance policy that's no longer meeting their needs, we're doing a lot of 1035 exchanges. So again, taking money from an old life insurance policy and putting it into a single pay with upside potential, guaranteed return of premium, the leverage of chronic illness benefits, those types of things, we're seeing a lot of opportunity there as well. So thinking about financial instruments with increased volatility and reduced interest rates, certainly bonds are in the conversation. Do your clients believe in bond funds? Do they believe in bond opportunities? That's where we're finding a lot of dollars as well, because again, if you can guarantee a return of premium plus have the chronic illness on the back end, I would challenge you that all of your clients' money that is in financial instruments that are what they consider quote unquote safe and secure should be considered in play. And then, as I alluded to, cash windfalls or inheritances, which is what we were talking about down in Seguin, Texas, with the money flowing into the banking system there from the fracking benefits that these Texas families were benefiting from. Again, 100, 200, 300 acres that they were building these fracking platforms. These people were being paid huge leases and had no idea what to do with those funds. So again, it's there. It's just up to us to find out where that money's being domiciled. So identifying prospects, again, this all becomes very, is the one thing I want to encourage you to do is even your younger clients that are in their 30s, 40s, 50s, have parents, perhaps. Maybe if the parents have passed, that's okay. It can open the door potentially for you to go and have a conversation with the children because again, engaging the children in the conversation of the care conversation, more than half of the people that you're going to engage, the parent expects the child to take care of them, both physically and financially. And it can be up to us to tie those conversations together. Certainly couples that want to protect each other during their retirement, couples with significant age differences. So again, those are always potential opportunities. And then certainly clients with loved ones who've needed care. Anybody that's had to provide care is a tremendous source of referrals and a tremendous source of those people will appreciate the fact that it's hard. This is a hard conversation. This is a hard thing to talk about. It's a hard thing to do. But again, as we move forward, this is going to be the number one benefit that your clients are going to want to talk about. So again, just to recap, 5 key points to remember. This opportunity continues to grow. Boomers want retirement security. They want to know where their money is, and they want access to it. Wealth care can address a lot of those needs and concerns. Everybody now wants simple applications, simple claims, no face-to-face. In a time of social distancing, we are the company that can and will get it done. So again, keep that in mind, whether it's wealth care or whether it's some type of permanent life insurance contract as well. We can handle it. We are in that marketplace. And for you, no long-term care licensing requirements. It's not long-term care insurance. And again, if we can help you identify additional clientele for wealth care, we're happy to do it. These are just a few case studies. We are having phenomenal success. I just accepted a check. As a matter of fact, it wasn't in the form of a check. The client was so ready to fund this particular contract, they wanted to know if they could wire us $500,000 to fund a wealth care life plan. So again, there are people out there that have these opportunities. It's our job to identify them. And as we talked about, there's a lot of opportunity out here. So let us help you. Let Kathy and her team are certainly prepared to help you with campaigns for these conversations as well. One last thing is I want to provide you a website that you can go to. It's a micro marketing website. There's a lot of detail that we're posting to this micro marketing website, including a white paper that covers a lot of what we've just discussed. It's www.sagicorproducer.com. When you get to that micro site, you can navigate through our product detail, our accelerating platform, the detail of the contract of the product, as well as marketing pieces that are available to you as well. Some of those are in fact fillable. And as I mentioned to Kathy before we kicked off, we do have some marketing pieces that are holiday specific. So keep that in mind as well. We look forward to being a partner with you. We look forward to continued success and continuing to talk about these opportunities as we move forward. So Kathy, with that, I'll turn it back over to you, but that's what I've got for today. So good luck and good selling out there.
Hey, Corey, thanks for doing this webinar for us. This was a lot of great information. Can you share your slides with me by chance? And that'll kind of give me a little nice information that I can share with my team.
Absolutely. Yes.
Thank you. And then if anyone's got any additional information, this is being recorded. We can email this back out to you when the recording is finalized. But if you have any questions on any life cases right now, it's 800-365-8208. My team extension is 607. That way you're going to be able to get myself or Kelly or Melissa to help you run options on this and get you the product information you need. I'm going to tell you that on Sagicor's website where you don't, that's our microsite where you don't have to log in to get any details. They give you everything you're looking for. So you've got the agent guide, you've got the client brochures, you've got every additional piece of paper that you need besides the application, which will be done online, to help you with any of their products and getting going with their details. They've got a lot of, besides their wealth care plan, they've got a great no lapse universal life plan, and they've got a great term package. So call us if you're interested. If you don't have contracting, let us know. We can go ahead and get the contracting emailed out to you today, or you can find it at our website at www.premiersmi.com and go get contracted. And you can do Assurance Bay contracting through our website too to get set up with us today. But again, if you have any additional questions, please let us know. My email address is Kathy, Kathy, at Premier, PREMIERSMI.com, like Sam or Igloo. So if you have any additional questions, you can email me on that direction. I have 2 questions that just popped up here. Do you have any video marketing?
Not yet, but that is that we are looking for. We're looking to add some video pieces after the first of the year. But I will encourage you to visit our micro marketing website. There are some absolutely amazing pieces there and a lot of those are fillable, so you can customize those with your own information.
Yep. The next question is, I think it came in the same time I mentioned this, but a copy of the presentation. Yep, we'll go ahead and get that out to everybody. That way, it does take a little bit for our marketing team to work on it to get it all copied and organized. We can actually email it out as a YouTube, but we'll go ahead and get that out to everybody that was on the webinar. So start thinking of your clients and think about happy selling with it. This is a good opportunity to be talking to your clients about single premium whole opportunities. A lot of agents aren't working that option, so this is a good benefit for you to bring into your loop, because the agents that are doing this, they're finding the $500,000, $1,000 cases like Corey just mentioned. Another email just came in. Prospects, what do you consider a significant age difference?
Yeah, and it can be when you're 75 years old, you're finding folks that are in their 50s, spouses that are in their 50s. So there really is no hard and fast rule. We're just looking for let's say more than 10 years of age difference when you're in that specific of a marketplace.
And did you say this could be a joint policy?
No, this is a singular. So Bob and Maria, the case studies that we did were 2 separate policies.
I think that was the last question that popped in. So everybody, we really do appreciate your time. I know everybody's been scheduled, having this time scheduled on your own little block. Please, thank you for doing that, and let us know if there's anything we can do for you. And went to the website.
Kathy knows how to find me if we need to do a one-on-one session or whatever the case might be, and take this to another level. I'm certainly available as well. So Kathy knows how to find me.
Yep, we can do that and get some more additional training if need to be. So thanks everybody, and take care and have a great day. Bye.
Enjoy your day.